I'm not a purposeful contrarian. Some people do that as a badge of honor.
Hmm.
What I try and do is build an economic framework based around a lot of work that I do based around the business cycle, technical analysis, economic fundamental analysis, and then say to myself, okay, we know what the present state of the world is, but what is the probabilistic outcome of where it's going based on the facts that we know now? And that's what catches most people off. Most people don't join dots and look forwards. So the world of macro investing is a world where you live in the future and figure out what is the probability of the world going there. Sometimes there's a lot of probabilistic outcomes, and other times there's like two. It's pretty binary. So that is the key thing to learn, is to figure out what is the state of the world in 6 months or 12 months forward, not today. Or if you're looking at big secular trends, what is the trend in the next 10 years, not today's trend? For example, if you were to look at today's trends, you might say the Indian economy is sluggish and not that exciting, filled with bureaucracy. When you look at the secular trend, you say average age of 28. But those are rare. Most of the time, you're having to live out in the future instead.
Right. And how much of that is looking at past data points and using that to make future decisions versus perhaps looking into more of the future without knowing that there's going to trend? So for example, like a lot of people think linearly, but it's very hard for humans to think in exponential terms, such as like network effects or how viruses spread. It seems to be a trend where we think either it's going to go linearly upwards or linearly downwards. It's really hard for humans to really understand what exponential growth or exponential decrease could look like. So how does that play into how you think about markets and investing?
I think it's a really important thing, because a lot of the world is cyclical. And we're trained to believe in cyclicality and linear thinking. Now, what's incredible is economists are linear. They write models. The models do not represent the real world, because if you show a small child a chart of GDP, it goes up and down in a cycle. We know the economy is cyclical, yet economists build a steady state model, right? So we know that's wrong. Doing very well, and I quit. And I decided to go and move to the Mediterranean coast of Spain and try something I've never tried before, which was writing. And that was outside of my comfort zone, because I gave up a lot of potential future income.
Right.
Starting Real Vision, something I knew nothing about, was even how to make a video, let alone run a company. But outside the comfort zone is where the magic happens. So I want to embrace it because I saw the opportunity. Blockchain technology, another one, outside the comfort zone. I don't know where this is going. I don't know what this really means, but I think I've got an idea and I want to be involved. So I actually live my life according to this. I go around the world diving with sharks. Why? Because it's uncomfortable. Or I love trekking across deserts. Why? Because it's dangerous. Not because I'm a thrill-seeking junkie. It's because you learn about yourself and the world around you when you're outside your comfort zone. That's why I like travel in general. I like to be in situations that is not a 5-star hotel with hot and cold running flunkies. You want to be in a backpacker hostel where you don't know what the hell's going on and you can't speak the language. Why? Because the magic happens there. The magic's never going to happen in a fucking Ritz-Carlton in some city. It's just never going to happen. But it will happen when you take yourself out of that. We didn't, because we had access to capital. So my network of people, from both writing Global Macro Investors, so that's the world's most successful hedge fund managers, family offices, sovereign wealth funds, that, and the people who were watching Real Vision, because the people were gravitating towards Real Vision were smart, were successful. And so I actually, the first time we raised capital, I just wrote to my subscribers for Global Macro Investor, which is my kind of institutional research service, said, listen, this is what I'm doing with Real Vision. We want to raise some capital. Are you interested? And we raised $5 million in about a week. I'm like, wow. The next time we went to raise capital, we thought we'd ask our members. because the US had passed the Jobs Act that allows you to crowdfund from accredited investors.
Mm.
So we're like, okay, fine, as long as you've got an existing relationship with them. So we just wrote to our members and said, listen, we're raising capital for growth. That's what we want to do. And there we raised $10 million in a week. We're like,
Wow.
oh my God. So now we've got a business being funded by our customers. Not only are they subscribers, but they're investors as well. And up to present date, we've raised about $40 million for Real Vision.
Crazy.
100% of it has come from our community.
Yeah, and the contrarian thing to add on there is, I think when a lot of media outlets are going for, the trend is really more short form, punchy headlines, free based business model. You really did the opposite, which is providing tons of value for really a very segment of users and going the paid route, and to the point where like you're actually raising money from your own community. It's really a 180 to what traditional media has been doing for many years, and is still really going towards that trend. So it
Yeah.
speaks to a lot of
I
your
mean,
contrarian thinking.
the long form content model in finance didn't exist before Real Vision. Nobody was doing it. We basically invented it. Everybody else was doing short form CNBC stuff, and we were like, no, we're doing hour long interviews. Podcasts like this did not exist before Real Vision. People don't realize that. So we've been pioneers, and you might think of us now as a media company. We think of ourselves more as a community, but where we go is actually outside our comfort zone further, and we're going to build the super community of finance based about a whole bunch of communities. We just bought, for example, a family office network. We've got the crypto community. We started Real Vision India with student programs, all sorts of stuff. And then we're building the super platform of finance as well, which is going to be the place where everybody can live their financial lives. So I can't let too much out of the bag for that, but that's what we're building. So it's a much bigger vision of creating the kind of place that we all want to live our financial lives and hang out with the tools and experiences that we all need. So we're not scattered around the web, using disparate experiences. So that's what we realized we could do. And we had a moat, and the moat was community. And all we had to do was treat that community amazingly well. And part of that was the journey of Web3 as well, because Web3 is basically a community model at core. So it's like, it was so perfect for us. So that's what we've been heads down doing. It's very difficult for anybody else to do this because most people don't have the community and don't have the community of scale at Real Vision. And we're still not that big. But as we expand, you build a community, you create network effects. If you create network effects, you can create Metcalfe's law, which is an incredibly valuable network. So that's really what's on our minds. And I think people need to do that. Step outside of what you think you do as an entrepreneur and actually ask your customers why, what, how, and think, what is it that I do? Because as you said, it's very easy to set up businesses. It's very easy to have competition. How do you do something that doesn't allow too much competition or gives you a lead time? Our lead time originally was long form interviews. Everybody said this is ridiculous. Nobody's going to pay for interviews. It needs to be 3-minute sound bites because nobody's got an attention span. That was the narrative, the hypothesis of everybody. And our hypothesis was,